Hello everybody and welcome. In this video, what we're going to be going over is how to put more money back into our bank accounts at the end of every month. The way we're going to do this is by treating ourselves as if we're a company, right? So each company, they have a statement of profit and loss, whether it's a corporation or a mid-sized company. You might have heard of the term P&L, right? So what a P&L is, or statement of profit and loss, it's a statement showing the revenue of a company. So that's money that's coming in versus expenses, money that's coming out. And then at the end, you're left with your bottom line, which is your net income. So your net income from a personal finance perspective is the amount of money you're left over at the end of the month, whether that be a surplus or a deficit, right? So we would like to be in a surplus, and what I've done is created a template in Microsoft Excel that if you follow on a monthly basis and you budget your expenses as well as your income accurately, you could be in a money surplus on a monthly basis. Now, with that being said, let's take a quick peek at what I've created here in Microsoft Excel. So a quick overview, you could see here it's our monthly budget. So we have our revenue, we have our expenses, net income. I also have some progress charts here so that for people who prefer illustrations, you could quickly look at the chart to see how you're tracking versus various expenses as well as revenue throughout the month, right? And then in here, you'll notice I have an input tab. So this input tab is where we're going to go in and we're going to actually put in all our income and all our expenses, right? So fairly straightforward. Now, with that being said, the first thing that I like to cover is revenue. So the revenue portion, let's go over the three different types of income that you could earn on a monthly basis. So the first type, like I just mentioned, is employment income. So this is very easy to budget, right? So to budget for employment income, you basically know how much you're going to make every 2 weeks, right? Now, for some of you, you might be in sales. If you are in sales and you're earning a commission, in that case, what I would do is maybe go back the last 6 months, or it could be 3 months, 9 months, however far back you want to go. I wouldn't suggest going too far back because you want the most recent information. I usually suggest 6 months, but it's up to you. And then you could take an average of the last 6 months to kind of budget what kind of commission income you're going to earn. Now, if you're the type of sales rep that you really get into your numbers, you dig into the weeds, and you know how much, if you have a calculation, then you could put that number, however you want to do it. But if it's something that's complicated and a little bit unpredictable, I would go back maybe 6 months and take an average, right? So that's the first type of income that you could potentially earn. Second type of income is business income. So let's say, for example, you own a bake shop, or let's say you're a real estate agent, right? This is kind of similar to the commission example that I just gave. What I would do is probably go back 6 months, take an average of what I've earned in the last 6 months in order to predict what my income will be in the current month, right? So for most businesses, I would say you would be able to do that. I mean, you also have to factor in different items that have come up. Maybe you've earned some customers, lost some customers. Maybe you have some escalators in your contract. Maybe you had to lower your prices. So you need to factor in all those things as well. But one other thing to talk about, if you do own a business, is that if it is seasonal, you can't simply look at the last 6 months. So for example, a landscaping business, right? So if you own a landscaping services business anywhere within Canada, let's say, probably you can't go back 6 months. So I'll give you an example why. Let's say you're in June, you're trying to predict June, right? So June, if I look back 6 months, that's going to take me into December, January, February, those colder months where you're probably not doing any landscaping services, right? So in an example like this, what I would do if I'm in June 2025, let's say, for example, go back and look at June 2024 and see what you did in that month. And then over the last 12 months, what you could do is you could factor in those items that I already mentioned, right? Customers gained, customers lost, any escalators in the contract, right? You also have to look at, any bank loans or anything like that that you might have attached to the business, right? That is going to bring down your income, of course, right? So that's one thing to keep in mind for seasonal businesses. Another thing you might also want to do, and let's stick with the landscaping example, is that if you're only operational, let's say April to October, you could always just take an average of the prior year in those months to kind of predict what you're going to do in the current year. Again, factoring in anything that might have changed over the last 12 months or so. So first type of income we went over already, employment income. Second is business income. Now, the third is more passive income or rental income, right? So the most common form here is real estate. If you own real estate and you're renting out a house, an apartment, a duplex, whatever it is, you might want to, again, look at the last 6 months. Take a look at, how much income you've made, and then you got to factor in all your expenses there too, right? So you might have a mortgage on the property taxes. You might be you might be responsible for the utilities, right? So that's another thing to look at there. Other types of passive income that some people live off of, not very common, but you might be living off dividend income. In this case, it's kind of easy to predict your budget for your revenue. In that case, you would look at the number of shares that you have outstanding and multiply it by how much you're going to receive per share. So then you'd be able to predict on a monthly basis. All right. So one more rundown. I've mentioned there already a few times, but 3 types of income. Most common, employment. Second most common, I would say, is business income for you entrepreneurs out there. And then also rental income, passive income, whatever you want to call it. Now, that we've gone over the main types of revenue, another thing that you might also want to look at is any side hustle you might have, a part-time job, a YouTube channel, whatever it might be, any other sources of income that you're making. You kind of want to predict how much you'll make in this current month, right? And again, I would maybe use an average of the last few months, right? However far back you want to go, right? So that's basically revenue in a nutshell, right? So revenue, fairly easy to budget. You could see on my model here, you have your budget column, and I'll go through the inputs later. But yeah, you would go in, you would input, how much in your budget that you think you're going to earn in the month. And then as the earnings actually come in, you could put it under your actuals column to see how you're tracking. So this is fairly easy to project if you are an employee, a little bit harder if you're a business owner or if you're making passive income. So with that being said, now that we've gone over revenue, let's move to expenses next. When looking at expenses, I want to look over the first 2 columns that I have in my spreadsheet first before doing anything else. So 2 things to call out here. Under the expenses, I've categorized everything as either fixed or variable. So a fixed expense would be like the internet, for example. Your internet bill, it doesn't change month over month, not that much, maybe year over year, but it's going to be like $80 a month, and you could set your watch to it that's the amount that you're going to pay every month. Whereas a variable expense is the amount that you budget to go out to eat out for dinners, let's say. So let's say on the weekend you like to go out for dinners or go out for drinks or what have you. That's something that could go up and down quite a bit depending on the amount of times that you go out, right? So that's just an example of fixed versus variable expense. Now, the type of expense, that's the next column. I've categorized every expense into 6 major categories. So I have house, utilities, transportation, necessity, entertainment, and other expenses. I'm going to go over each of these in detail right now. So let's start first with house expenses. So you start off with mortgage or rent. So either you're a homeowner or you're renting. Either way, you're going to have an amount that you're going to have to budget for, right? So if you are a homeowner, you'll also have to pay property taxes, maintenance fees, and home insurance. Whereas if you're a renter, you won't have to pay these, right? So for these ones, you could budget 0 if you're a renter. But if you are a homeowner, property taxes, that's a fixed amount that you're going to have to pay every month, right? You get the bill at the beginning of the year, and you know how much you're going to have to pay in X amount of periods, right? So it might be monthly, it might be every 2 months, 6 times a year, whatever that is, right? Now, for maintenance fees for condo owners, there's a certain amount that you have to pay to the property management company, right? So that you should budget for. But even if you own a freehold home, maintenance is always a part of owning a home, right? Your air conditioner could break down, your fridge could break down, could be a whole bunch of other items. Inside a house, things will break. of course, right? So in this case, again, you might want to look back 6 months, look at what your expenses are in maintenance, and you might want to put a certain amount aside just in case something breaks. And even if you are a condo owner, understand that the property manager is not going to cover everything, right? So certain things are not covered. It's important to understand what is covered, what is not covered, and budget the condo fees and then a little bit on top of that. Now, for home insurance, this is another fixed expense. You receive the bill on a monthly basis, or sorry, you receive the bill at the beginning of the year, and on a monthly basis, you pay whatever you have owing, right? So this is a fixed expense. One thing to call out for mortgage and rent, I'm calling it a fixed expense, even though some people might argue it's variable, right? Because if you have a variable rate mortgage, you're susceptible to interest rates increasing and decreasing, as well as if you're paying rent, there's usually escalators year over year, maybe 3% to factor in for inflation, right? So even though you could argue these are variable expenses, over a 12-month period, you more than likely know what you're going to pay on a monthly basis. So I'm calling these expenses fixed. Now, we're going to move on to utilities expenses next. Utilities expenses, whether you're the homeowner or renter, you have to pay these. Usually even renters are on the bill for utilities expense, right? So this is electricity, gas, and water. So basically it's very easy here. The more you consume, the more you're going to pay, right? So if you're in a room and the light is on, you might want to turn the light off. You could save a little bit on your electricity bill. Same goes for water and same goes for gas, right? So for your heater in the winter time, the less you use it, the more you'll save on your gas bill, right? So it would be interesting maybe to take a look at your bill. There's different measurements for each of these, right? Like water, for example, is measured in gallons, right? So you want to take a look at your consumption in gallons to see how much you're using and your potential savings, right? So the next set of expenses we're going to look at is transportation, car payments. Most people have a car payment, right? Then there's gas, maintenance, car insurance, and public transportation. So if you live in the city, maybe you don't pay for the first three and you're only paying for public transportation, right? Subways, buses, trains, that kind of stuff. But if you are in the suburbs or even in the city, it's possible you're paying for all four. So car payments, this is a fixed expense. You know how much you're going to pay on a monthly basis. You might pay more to pay it off quicker, but more or less, you know how much you're paying monthly. For car and maintenance, I have this as fixed. Technically, it's variable, right? Because gas prices, they go up and down. Maintenance varies from month to month, right? One month you have to change your oil. Next month, you might have to work on your brakes. But more or less, this is not really a savings opportunity because if you need gas, if you need an oil change, if you need your brakes looked after, this is something that you have to take care of. It's not something that you could put aside because your safety will be at risk, right? So I have this as a fixed expense, and you could come up with a good budgetary amount to put in here on a monthly basis. Sometimes you'll be a little bit higher, a little bit lower. And then there's car insurance. Car insurance, again, you get a statement at the beginning of the year. You know how much you pay on a monthly basis. And then public transportation, that's another fixed expense. So no real savings opportunities here. Public transportation, each month, you know how many times that you're going to be riding the bus or subway. So you're going to have to purchase a certain amount of tokens, right? So let's move on now to necessity expenses. So necessity expenses, I have groceries, cell phone, and internet. Now, for all of you laughing about cell phone and internet, I would argue in today's day and age, if you don't have internet, if you don't have cell phone, you're not connected to the world. If you work remotely, you can't work. You're not connected to your family, friends. You don't know what's going on. So I would say it is a necessity. So let's start first with groceries. Groceries is a variable expense. So groceries, this could also say food here, right? So if you're the type of person that you're eating out for breakfast, lunch, dinner, you could save a lot of money by just going to the grocery store, buying all your food, your coffee, everything from the grocery store. Now, if you're already doing that, there's saving opportunities there too, right? So if you're at a premium grocery store, you could go down to a budget grocery store where the same item, the exact same item, you might save 10, 20%, right? So that there's big saving opportunities there. You might want to budget on a weekly basis how much you're going to be spending on groceries and food. Now, for cell phone and internet, these are both basically the same. You could save money by switching vendors, but more or less the amount you pay month over month is the exact same, right? Now, entertainment expenses, streaming services, and spending money. Streaming services, some of you might be screaming and saying, this is a fixed expense, right? I know how much I pay for Netflix every single month. But why I consider this a variable expense is because you need to do an audit on how many streaming services that you're paying for. So take a look at your credit card statement. Maybe it's coming out of your checking account. Take a look at these things. See how many streaming services you're paying for that you're not actually using, right? Like nowadays, it's very common. You take a 1 month free trial for Apple TV or Hulu or whatever, and you forget about it. And 2 years down the road, you're still paying for it. So that adds up over time. You're spending hundreds of dollars there. So that's big time savings. And then, yeah, once you've done your audit and you've eliminated the streaming services that you're not using, then at that point, sure, it becomes a fixed expense. I agree with those of you who are saying that. Now, for spending money, this is what I was talking about before. Going out for dinners, movies, if you want to hang out with the guys or the ladies for, hanging out with friends, right? Maybe you go to sporting events, whatever you like to do, right? So this is where you could easily go up and down quite a bit, right? So if you're the type that you're a homebody and you're staying at home, maybe you invested in a home entertainment system, maybe you're not spending too much money in this area. But if you do like to go out, maybe you live in the city or you have a lot of friends, you want to hang out, go to restaurants, maybe put a budget together, right? Maybe you say, okay, $200 a week, I'm going to give myself to go out, and try and hold yourself to that, right? Like it kind of becomes a challenge. And if you could stay within your budget, that's a way to save some money. Now, the last type of expenses that we're going to discuss is other. Other is kind of a catch-all. So I put gym and activities in here. Gym, most people have a gym membership, lifting weights, but maybe you don't like lifting weights. Maybe you play basketball, soccer, you do jiu-jitsu, you do hot yoga, whatever it is that you like to do. Again, you probably have a fixed amount that you're going to be paying on a monthly basis. So put that in your budget, right? So that you know exactly how much it is that you'll be spending on a monthly basis, right? And then I left in other categories. There's certain expenses like bank fees, for example. There's a lot of banks right now that don't charge any bank fees, right? So some people are paying them, some people don't. And then there's other more niche things that, not everyone is paying for, such as the local Rotary Club. Some people belong to a Rotary Club, right? So you can maybe change other in here and put Rotary Club and put what that cost for that membership is on a monthly basis, and you could budget for it there, right? So now that we've looked at revenue and expenses, net income, you can see it there on the bottom. That's fairly simple. Just taking revenue, less expenses, and then whatever you're left over with, that's your net income. So now that we've gone over expenses, let's go over the inputs first. But before we do that, there's one thing that I want to talk to you about first. Hello everybody. If you're liking this video and you're a beginner in Microsoft Excel and you want to go from zero to hero in Microsoft Excel, I have the course for you. The link is in the description below. I have over 100 videos individually bookmarked so that you can learn at your own pace. So for example, if you want to learn how to use VLOOKUP, there's a few videos on VLOOKUP. If you want to learn how to do a pivot table, I have an entire chapter on pivot tables. So again, if you want to go from zero to hero in Microsoft Excel and bring your Excel game up to level, it's in the description below. Also, if you like the Excel file that I'm using and you would like to use it yourself, the link is also available in the description below. Thank you very much, and let's get back into the video. Welcome back, everybody. Now what we're going to go into is the input tab. So I'm going to show you how to go in and input all of this information that you see on the screen here. So if I go into the input tab and let's say for revenue, for example, so this is the income I earn, let's say from employment. So every week I'm going to get paid, let's say $1,250. And then throughout the month, as that money is coming in, I want to go ahead here and I want to actually put in this amount, right? So as I'm getting paid, so let's imagine, for example, I'm in the last week of the month, right? So some months you see pay 5 there might be a little bit confusing for some people, but if you get paid weekly, most months are only going to have 4 pay periods, but some months will have 5. So any payroll professionals, accountants, they'll tell you that too, right? So under column B here, I'm gonna put 1250, and then I'm gonna move on. So let's say house expenses, right? So my budget for mortgage and rent, and I'm gonna increase the size here so that you could see it better, right? So for mortgage and rent, let's say it's 1,500 a month, property taxes 250, maintenance, home insurance, and then throughout the month as the actuals actually come in, right? Let's say today I just paid $200 in maintenance fees. It came out of my checking account. I'm going to go in here and just update my Excel spreadsheet, right? So utilities, same thing, right? So my budget, I have $200 in total, right? And as the expenses actually come through, I'm just updating here in this actuals column, right? So same thing here for transportation expenses, right? So I have my budget, and as the expenses actually roll in, for a lot of these, you're going to have to wait till the end of the month because sometimes some of these are unpredictable to know, right? So one thing to call out here, necessity expenses. When we get to groceries, it gets a little bit more interesting, right? So let's say you go grocery shopping once a week, right? So it's $200 a week you give yourself to budget, right? Let's say you're a family of 3 or 4, or maybe 200. It's too low, I don't know, in current day, right? But as you actually go on these grocery trips, per week, you could come in here and you could just fill them out, right? So that's for necessity expenses. And then entertainment expenses, you could see under column AK here, I have streaming services 1 through 6. You might have more than that. I'm not actually putting in the different types of streaming services like Spotify or Netflix or anything like that. But once you do the audit on what streaming services you're actually using, that's when you could come in here and budget. Streaming services usually not too expensive, right? Like 15, $20 a month, right? So you just go in here, budget, and as the expenses actually hit your bank account or your credit card statement, you could go ahead in here and you could fill in your actual results. And then here, you're spending money. So entertainment expenses, going out for dinners, movies, what have you, right? So let's say you budget $150 a week. So at the end of every week, let's say Monday morning, you look at your credit card statement or what came out of your checking account, and then you could come in here and you could actually put your actual. So over the weekend, let's say I spent $100 week 1, $100 week 2, week 3 and 4 was 200, and then week 5 was 50, right? So I don't know. Nowadays, it seems a little bit challenging to get to these figures. I mean, it seems like the moment you leave your house these days, $100 just flies out of your pocket, right? But at least if we budget it here and we track it, we could try and hold ourselves to the budget, right? And then here's our other expenses, right? So our gym fee, right? So if this is a fixed expense, you know how much you're going to pay in your gym fees, right? So that's $100. And then if you do pay bank fees, right? Let's say your bank fees are $20 a month, put it in there. Like I was saying before, right? If you have a Rotary Club, right? Let's say that's $15 a month. When the expenditure actually comes in, you could record it, right? And then as you're filling in all of these, the progress charts here are going to update, right? So I'll show you an example. Let's say let's take necessity expenses here, right? So I have 86.2%. If I go back in here, let's go to necessity. And let me update, let's say my grocery trip number 5. Let's say it was actually $200. Let's say we went way over 300, right? So now if I go back here, you could see that my necessity, it's updated, and actually it's above 100%. So you could see here, even on row 28, you could see now it's showing you in red, right? That you've gone over your budget for the necessity category, or specifically for groceries, right? And then, so that would be the input. And then you can see here the progress charts. I have it here. It's a cool little thing to look at, I guess. Some people are more, I guess, they like to see an illustration, right? So that's what this really provides. So for revenue and for income at the very top, like right here, revenue and income here. Keep in mind that your target for revenue, you always want to be at 100%. You never want to be below that, right? For your income. So if you have a side hustle, that gives you the opportunity to maybe go above 100%. Same with income, right? You always want to be 100% on income because that means that you have the amount of take home money you have at the end of the month is more than you actually predicted, right? Whereas expenses, it's the opposite. You want to be under 100%, right? So if you want that, if you want to maximize the amount of take home money at the end of every month, then try to keep your expenses lower than 100%. So that pretty much concludes the video that I have for today. So I don't know. I'm not going to tell you guys what to do. If you do have a cash surplus, I would suggest maybe investing in ETFs, stocks, maybe real estate, or maybe you have that YOLO mentality. So maybe go out and buy an 8-inch screen TV or take your girlfriend out for that expensive dinner that you've been promising her for the last 6 months. So I don't know. I hope you enjoyed this video, guys. I hope you learned something. And as always, keep fit and have fun.